All right, going live in 5, 4, 3, 2, 1. Go. You guys are on.
Okay.
Well, good morning, everyone. We are live on Facebook today, and we are AREAA, the Asian Real Estate Association of America, the San Francisco Peninsula chapter. So great to see so many people logging on for today's event. We've sent out several text reminders, so hopefully many of you are joining us today. And it looks like, yes, we have lots of people logging on. This is awesome, awesome. So I'm Debbie Wong, for those of you that don't know me, and I'm a board member for AREAA, and I'm a 30-year veteran of the business, the real estate business. I'm a broker owner for Better Homes and Gardens Real Estate, and so I've been around a long time. And so I'm here today. We put together this panel thanks to Winnie Ho of HSBC, who is actually leading out this particular part of the AREAA organization.
Hello.
And hi, say hi, Winnie.
My honor to do this.
Well, we're so excited to have this. Actually, the reason how it all really came together is because a lot of people have questions, especially, you know, if you're, let's face it, we're in the COVID times, right? So banking is done a little bit differently. Agents have a lot of questions. You know, we're all trying to work this out together and figure it out together. And one thing I know about our particular chapter, the San Francisco Peninsula chapter, is that we have amazing individuals that sit on our board that have so much knowledge. And so through the brilliance of Winnie and the other chapter board members, they put together this really cool mortgage link. So you could actually visit the AREAA website, click on the link, and get lots of answers to your mortgage questions without necessarily having to make multiple calls to multiple entities. We've got people that can answer your question right then and there. And it's not necessarily, you know, because different banks have different guidelines, et cetera. But basically, you have the opportunity to ask people who have a lot of knowledge. So with that being said, Winnie, do you want to add anything about the really cool mortgage link that we have?
Yeah, actually, we just want to provide more, you know, resources and up-to-date information, especially, you know, the situation we're in, like you mentioned, you know, with the pandemic. Lots of changes, you know, it's fluid. Something might, you know, you might find out some information today and it might change next week. So you know, we thought of the idea of having just, you know, at your fingertip, really, because we have someone manning that link. And we will get back to you within 3 hours. You know, there's someone also a backup. Let's say, you know, what if somebody doesn't get back to me? There's always going to be, and if we see the question and whoever's manning that link doesn't, you know, have the information, we'll definitely go around among ourselves with all the sponsors, with all the lender sponsors, and find you the answer. So it's a very powerful tool. So please, you know, try to use it. Visit, and then, you know, if there's any comments you like us to you know, change it, or, you know, we can always change it as we go, but we do want to be, you know, that click that you're going to go to when you think about, hey, I have a mortgage question. That's where to go.
Well, I really want to make sure that people understand how valuable a tool this is, because realistically, you know, every bank has different guidelines and different programs, et cetera. So what it entails is the person actually has an opportunity to ask someone who has a tremendous amount of experience that's not necessarily regulated to one different type of bank or banking program. So it's very brilliant, if you ask me. So with that being said, first, before we get started, you know, these amazing venues and webinars and live chats, et cetera, are really, we're able to do this from the generosity from our sponsors. So I just want to thank our silver sponsors today, which is Bank of America, Citibank, and our bronze sponsors, Wells Fargo, Bank of the West, US Bank, HSBC Bank, Sterling Bank, Chase. And also, let's not forget our affiliate sponsors, SGDM Earthquake Retrofit, VR Squad, Toll Brothers, Asset Preservation. And I hope I got everyone. If I missed someone, I'm sure I'm going to get it in the text in a moment. But again, thank you all for your sponsorship. We surely appreciate you. I'm going to go ahead now and take this opportunity to introduce our esteemed panel. Helping us to answer questions about the appraisal process and during COVID times is Michael Simmons. He's the principal and founding director of Axis Appraisal Management Solutions, a national AMC. His 40 years experience in the real estate industry and a mortgage broker and veteran mortgage banker gives him a unique lens into helping shape Axis's critical commitment to creating relationship-based and service-oriented appraisal services organization. So what that means is, man, he really knows a lot of stuff and he knows what he's doing. Also representing the bankers, we have Ms. Jasmine Chang, a 30-year veteran of the real estate industry, currently with US Bank. Yes, we do heart Jasmine. And she is one of the founding board members of the San Francisco Peninsula chapter. So we love her dearly. And she is, I would say she's a legendary person, legendary in the field, but actually she has achieved legend status with US Bank. And then we have Ms. Pove Ohm, amazing lady here with 16 years experience in the mortgage industry. She is the business development specialist, senior mortgage consultant at Guaranteed Mortgage. And just so that you know a little bit about her, Pope managed the housing division for a HUD-approved nonprofit housing agency in San Francisco. And she managed their housing programs that included first-time homebuyer education, foreclosure intervention and counseling, and helped design and successfully ran the AREAA acquisition and rehab program for low to moderate income buyers. Amazing, amazing work. And last but certainly not least, we have Mr. Let's see here. I have John Ecker, and I have your information here as well. Let's see here. John is a 30-year plus mortgage veteran who's been running top producing bank loan officers in bank branches and with self-source businesses. John's current team serves 44 bank branches, 2 wealth centers, and a separate team of self-sourcing loan agents. His expertise is in mortgage sales activities, marketing, recruiting, underwriting, and pricing with an emphasis on purchase loans. Wow. Talk about the titans of industry here with joining us today. So thank you so much for being here.
Glad to
All
be
right.
here.
Everybody say hi.
Hi.
Hello.
So I hope I did
Morning.
your bios justice. You guys are all rock stars. Thanks again for being here.
Thank you for not calling us old.
Yes, we could talk about face cream later. Go ahead,
Okay.
Winnie. Oh, did you have a question, Winnie?
No.
Oh, okay. All right. So we've had some questions that were actually sent in by some people that are agents. And why don't we go ahead and start with some appraiser questions. So question for, let's see here. Oh, here we go. How was the activity the past 3 months after COVID? Are the current comparables supporting value? And do they factor in the economic outlook when figuring out the value? In other words, has the COVID really affected our values is the bottom line question.
So Debbie, thanks for the question. That's a terrific question. Problem is there isn't enough current information to really answer that with any specificity. Has COVID affected values? Has it affected the markets? Clearly, but there isn't a system that can correlate changes in value, although there are some forces that we can kind of identify. And I think they're important for your audience to understand them. So let me just go over them quickly.
Thank you, Michael.
So you have an inventory in almost every market in the country that's lower than it's ever been. It's lower than it was last year, and last year you had a very low inventory, and as a consequence, demand outstripped supply. It's even more dramatic now. Couple that with the forces of interest rates now in conforming realm being down in the high 2% range, certainly the low 3s. That's to use one of the most overused terms today, that's unprecedented. If you add to that the fact that anywhere from 20 to 40% of the public is unemployed or underemployed, depending on where you get your stats, you have a bunch of countervailing forces that are pulling and pushing in all different manners. And I don't think we've ever experienced these kinds of forces. The other thing that's happening here is that the impact of COVID has changed the shape, I think, of actually the purchase market. So you have borrowers, buyers specifically, who actually want different things. For the first time in, I can't remember when, suburban sales are outstripping urban sales. And that's a dramatic change, a dramatic shift. Why is that? Part of it is because you have borrowers and buyers who are looking to escape the pressures of being in a city, being confined in smaller places, condos, townhomes.
Definitely, there's no doubt. I mean, if for us brokers that follow market stats weekly, and many of us are following them daily now, we are definitely seeing a slowdown in the condo market. There's no doubt.
So as a consequence, what you're getting are buyers who look for homes where they, have more space to have a home office, because that's a fundamental change that's rippling through our, not just our economy, but in our society, kind of how we approach the entire work realm. Excuse me. So they're looking for different types of homes. They're looking for different homes in different areas. They're looking for homes where if they have children, there's more room and places to play. They actually have yards, because nobody's comfortable about going to parks, really, in a lot of ways today. So
there's a whole thing about homeschooling. You need a place now to dump all the schoolwork stuff, right? And have the computer set up for Zoom, et cetera.
Yeah, that's just exactly right. So there are forces that really are driving decisions today that are different from the forces that we normally expect in our markets. And we've had, if you stop and think about it, all of 4 months to assimilate this, recognize it, and try and drive statistics that tell us something meaningful. And it's just way too early. But what is happening is that in the short run, we're looking at price appreciation of anywhere from 6 to 8%, and in some high balance areas, it's much higher than that. We've done. I know one of the questions that you'd asked was what kind of markets we're seeing, right? So we've seen the refinance market send us assignments on a couple of $40+ million homes, and even one $50+ million home. So it runs the entire gamut.
It's really very interesting. We actually have we have a question here. As a realtor, when I'm trying to do valuations that are meaningful when we're in the offer making process, and also when I'm looking for comparables, when I'm about to either make an offer or take a listing, how much weight should I be placing on comparables that are what they deem are pre-COVID? Meaning, should I be looking at comparables for January and February, possibly even December, right? And then we move into the COVID months from beginning in March, April, and May. Now we're already into July. So how much of, when we're looking for comps, should we be explaining to the customer that, for example, the sellers, we definitely in some areas, they've got to be a little bit more realistic on pricing now. but how much of that are you seeing? The comparison between pre-COVID comparables and then the current COVID comparables that we do have?
Well, allowing for the differences in property types and areas. I think the part of the problem is that with such a low inventory, we're all hostage to whatever comparable sales there are in the market. And that may mean going back more than 3 months. It may mean going back more than 6 months. There's kind of a running joke. I was on a webinar yesterday, a call with a bunch of folks from the Appraisal Institute, and the running joke is, if it keeps continuing in this vein, we're going to all be using the same 6 comparable sales, for everything, because there won't be anything else.
That's hilarious.
Yeah, but it's a challenge.
Sure.
It is a challenge, and I think one of the things that's happened too is that we seem to. It's just a kind of a sense of mine, and I don't know that I could prove it statistically, but I think we see less leverage in transactions today than typically. Not as many 90% loans, not as many 95% loans, certainly. If you're doing FHA loans, it's a little bit different, because that's the reason you do FHA or VA loans, is the lower down payments.
Well, I think certainly we are seeing not that there's anything wrong with 5% down or 10% down
No.
FHA financing, surely, but in the areas that we service, we certainly see a very high level quality of borrower, meaning that, they've got 20, 25, 30% down or more.
Sure.
And the funny thing is when we look at the unemployment rates, when we look at the demographic of the typical buyer, we notice that they're not necessarily affected by the types of the jobs and we're seeing the higher rates of unemployment. So great answers to the question. Thank you so much, Michael. Let's go ahead now, and we've got a banker question. Okay, here is the question. We've noticed changes to the jumbo loans. Are they still available? And if so, what are the changes? I mean, do you need higher reserves, more documentation? We all kind of need to know what's happening. So who would like to take on that question first?
I can go first.
All right, Jazz, thanks.
Okay. So basically, yeah, I get a lot of realtor call and they're like, hey, I heard so-and-so is not doing any more jumbo. Is it still available? So yes, a jumbo loan is still available. You could still do a 10% down. You could still do sometime a 5% down, depending on which lender you go to. However, expect more condition, okay? Higher FICO score, more reserve. Like I said, every bank is different, but definitely check with a different lender or use our mortgage link, and we can guide you to who can provide these jumbo loan for your client, okay?
Wonderful. Thanks, Jasmine. And by the way, guys, if we're able to, we might ask one of our coordinators to flash up the link before the end of our time here together so that you can see what it looks like. John, would you like to answer next?
I've been chomping at the bit. Yeah, jumbo certainly is not going away. And I really kind of want to push it back to the link. Every lender is different. Everybody's made some changes. I don't think anyone's made little change and made none. Some as big as lowering LTV. From our side, our Marksby product is an 80-10-10. We just raised the FICO score a bit. And then on some of our investor products, we lowered LTV a bit. But overall, the changes haven't been very much. But the link is excellent because it's impossible for any realtor to know every single jumbo lender and what we're doing and what the niches are. So that link is excellent. We've gotten some good ones, and we are a long way from having no jumbo in the market. That's for sure.
Well, I would think because of the pricing, almost every loan's a jumbo loan, it would appear, right? Poe, please join us and let us know your thoughts on this.
Thanks, Debbie. The answer that Jasmine and John gave is exactly on point. The mortgage link is absolutely amazing. It's a one-stop shop where you can get all your questions answered without calling 50 different lenders, because there are hundreds of different investors out there with different guidelines. The biggest change that I will say in the jumbo arena is that guidelines are much more strict now. So it's really, really important to speak with your loan officer or utilize our mortgage link to reassess your pre-approval. You know, ask your loan officer, am I still pre-approved when I got this, you know, this letter from like 3 months ago or 6 months ago?
Excellent point. Excellent point. Yeah.
Yeah. And I also don't want to forget about our non-traditional buyers. Not every buyers have, you know, the typical income that, you know, a W-2 salary. Sometimes you're self-employed. For example, Debbie, yourself, you are a self-employed realtor. And what do most self-employed realtors do on their tax returns? They write everything off. So, you know, that's why the Mortgage Link is a great, great tool, because these loan products are still available, the non-traditional loan products for self-employed borrowers. They're not going away. It's just limited now with stricter guidelines. So definitely, you know, utilize our link and talk to your mortgage advisors.
I'm really glad that you brought that up, Pov, because many of us who are earning, you know, let's say in non-traditional work, or we're not getting a paycheck, as you say, we are 1099, or many of us are business owners, you know, the way that we go about getting a mortgage is a little bit different, right?
Right.
Than the traditional borrower, for sure. I think it's more painful, at least I think it is. But at any rate, maybe you can also chime in, Jazz, on what your thought is on self-employed borrowers.
I'm not going to sugarcoat it. It's tougher to be. If you are self-employed, you can still get a loan. However, they're going to make you verify a lot more, like provide current P&L. Usually that's all we need is the P&L, and that's it. But now you got to make sure that your business is still thriving and that you are in a business that they may ask you to show proof on a business bank statement that income is still coming in, because there's no way of knowing that, hey, if my business still functioning. Okay. So just be patient, a little bit more extra documentation, a little bit more work, and work through with your mortgage professional, and we can help guide you through that. But definitely they're a little bit stricter on using business fund now than they used to be. So, you know, like I said, just extra documentation for self-employed.
We have another question to this point. On average, these are all for the mortgage professionals. How long should we be putting in the contract should we be putting in loan contingencies, was the question. And then how long is a close? Can a 25-day close be done? Or should we be asking for a 30 or 35-day close of escrow?
I can take that question first.
Thank you.
I mean, a lot of my purchase transactions are still our markets are very, very competitive. Even a 30-day close of escrow can knock some of our buyers out of, you know, the bidding war. So I'm still closing loan 21 days. However, you know, I would suggest for realtors to always call the lender first before writing that offer and ask about a specific buyer. And then the loan officer will be able to assess how complicated the loan is. Will they need more than 21 days? Will they need more than 25 days? They will be able to assess case by case.
Okay, that's very valuable information. Thank you so much, Poe.
Deb, for us, I mean, and I talked to a lot of the colleague in the big bank. We can't do a 21 day. I'm just gonna be upfront, or even 25 days tough. 30 days is what we're requiring. Not only that we're busy in refinancing, but you know, purchase is, you know, always take priority. But because of the extra documentation, extra step that we have to go through, it's really hard for me to close a loan in 30 days. So just to be realistic, you know, be patient, give them a little bit more time. There could be nothing wrong with the loan, but we just need more time for it to go through the system right now. John?
Okay. John?
Jasmine, I wanted you to go first. I think that was great. We're at 30 days also. We're hoping that it's short term, but we're scared to just be under delivering. So we pushed our purchase out to 30 days, which we're very niche driven, doing 60 DTIs and doing some stuff that other people won't. So when we communicate clearly we're okay. And the only time we're not is when we're under communicating. So calls like this is great. So it's temporary for us at 30 days, but I would say that most lenders are a little bit stressed right now, and a little more time is going to help as long as you can still secure that contract with that amount of time.
I've got another question here. Hey, the multiple offers seem to be back in certain areas for certain types of property. Gosh, it's really trying to decide to best service the customer. Should we come in non-contingent? Do you ever recommend that? Between now the way the contract works between loan contingency and appraisal contingency, should I have at least the appraisal contingency and not the loan contingency? Any thoughts there? Not trying to put anybody on the spot here, but it's a good question.
Yeah, it's a great question.
So as mortgage professional, one, we're not allowed to tell the borrower to lift contingency. That's not our job. Okay. A lot of people go, oh, no problem. Yeah, we can't put, and usually what I explain to the borrower is that as long as you know the risk, it's up to you. In the old day when we're not so busy, you could do like a pre-approval, and then you say, okay, I'm good. My credit score perfect, my DTI is perfect, but we have no control over the appraisal. And that's something that I always tell my borrower. If you do a non-contingent, it's kind of like a cash buy. So in case something happened, your down payment is in jeopardy. But you know, some buyers are super strong and they have more than enough money to put down in case the appraisal does come in, and that's up to them if they're in a multiple offer situation.
Very good, very good. And John or Kobe, you want to add?
Well, I'd like to ask the question of Michael, since we have an appraisal AMC on the phone.
I'm actually going to ask him really quick right after, but I wanted to get Pove to answer this. And then as a broker, I have some advice for this particular agent, but go ahead, Pove.
Yeah, I really, really appreciate that question a lot, actually. I'm blessed where I work with realtors who always consult with me first about contingencies. The last thing you want is your realtor writing a non-contingent offer, going to a contract, and then the lender finds out when they receive a ratified contract. You know, a lot can go wrong.
Yeah, that I would venture to say as a broker, managing agents, typically we train them to always partner with the lender. Always partner with the lender. Don't do anything without speaking with them first. Make sure you understand the risks. And, you know, follow the old school rules of FHA borrowing times, where not only did the borrower have to qualify, but the home had to qualify as well.
Exactly.
Meaning, study your values, right? And this is going to be a question for Michael coming up in just a moment, John. But there's also in the CAR agreement and the CAR forms, there's a wonderful document called the market advisory. And what we do is we make sure that our agents or any agent who is representing buyers in this market in particular needs to take a moment and do a Zoom presentation or in presentation and make sure that, you know, the customer just isn't robo signing that document. It actually goes through and explains the meaning of coming in without a contingency for a certain part of the agreement, which would be for property condition or a financing contingency. So, but John, you wanted to make sure that Michael had something to add about the appraisal contingency. I could see it.
Well, and I'd like to refine that question too, and also add, are you doing more drive-bys or like where you walk through with the customer and do it? Is the type of appraisal changing? So 2 questions: how's your purchase turn time, and then are you using drive-bys and other various types of appraisers now as appraisals as opposed to just doing a regular 1004?
Thanks, John. Excellent question.
Yeah, those are great questions, John. The marketplace today allows a greater deal of flexibility. They're really COVID-driven alternatives to how we can do an appraisal. We make every effort in every circumstance where it's possible to do a full appraisal with an interior inspection done by the appraiser. We've had from day one, we have schooled and trained our appraisers to adopt all the protocols that both protect themselves and protect any potential clients they come in contact with. And if there's a condition that would overwhelm a mask and gloves and leaving doors open and fresh air, then you know, there are alternatives for doing that. But maybe the best alternative at some point in time is that, you know, either the borrowers aren't there, or maybe they just don't do the transaction that they're looking at doing at that point in time if they're sick.
We have another question from Robert Pay. Thank you, Robert, for your question. We sure appreciate you. The question is, do you think properties with a view adds to the appraised value more so than a property without a view?
Yes, there's no question. It's the amount of the value of a view on a on maybe a 1 or 2 bedroom condo is probably less impacted than it would be on a house on a hill. I mean, you know, those are all relative questions, but views, especially in the Bay Area where you've got such gorgeous vistas, it's they have always been important.
Wonderful. Thank you so much for that, Michael. I really appreciate it. One thing that as a broker that I can mention that during these COVID times when we really don't have the opportunity to do face-to-face interactions with a lot of different people, and for those of us that miss that, I know that I certainly do, I've found a lot of cooperation. You know, when I get appraisers that call me and say, hey, you know, you had a sale on such and such street, could you give me a call back? I just had some questions about that. I need some help. You know, I didn't see that property, or I wasn't able to see it because of COVID times. I'm only looking at the outside picture, or there's only one picture. My advice to other brokers and agents that, you know, when appraisers call you for help, to ask for help about a recent sale that you had, please call them back. Pay it forward, because there's going to be a time when, you know, somebody trying to appraise your property is going to need help with questions and, you know, about the property itself, or what were the nuances of that particular transaction. So be nice and be kind, guys, to appraisers always. I just wanted to put that out there.
Yes. And one thing I do want to say too, for people who are refinancing, you know, there is a misconception that, oh, you know, I'm refinancing, they're just going to be a lot more conservative. And I don't find that necessarily true, but there are always a way that you can ask for a reconsideration. If your appraisal come in low and you read it and something is not right, or the appraiser make mistake, we're all human. So just, you know, contact the lender. And I always suggest them call whoever they bought the house from and say, hey, can you provide me some comp, or get help to, you know, hopefully raise that appraisal. So they're always like a way that you can ask for a reconsideration. It doesn't always happen, but I had a situation like that and it came back at fine.
Wonderful.
Yeah,
Thank you.
and I also want to add one more thing in regards to the contingencies. Based on a recent transaction that I've had, the seller was adamant about removing the going in with no appraisal contingency for whatever reason. And of course, the buyer and the buyer's agent really want to make this contract work. So the strategy behind that was that the borrower left the loan contingency on. They waived the appraisal contingency. However, if the property doesn't appraise, they may not get their loan approved. So therefore, they can still leverage the loan contingency to get their money back or to renegotiate.
Good point. Good point. Although they are considered separate events, if you will, in the contract in itself, but certainly, you know, you do the best that you can to provide the best opportunity for your particular borrower or buyer. And I think everything does have to be considered, and everybody has to be understanding of the risks. Go ahead,
Right.
John. You look like you had something to say.
No, I'm good.
Okay, you're good.
Yeah.
Okay,
But
cool.
I agree with Cove in terms that, you know, Debbie, in the contract, you guys have separate like loan contingency, appraisal contingency. To the lender, everything has to meet and like, you know, fit in to make it a final loan contingency removal, right? But, you know, I always tell my buyers, funny that I like, well, when you made an offer, you were fine with that price, and now it's 10,000 less than you already want. You know, I think it's just people don't want their appraiser to come in lower, but you know, when you have a real talk with them and say, hey, it's only about $50 in payment, is it worth it to back out of the contract? So have that conversation. That's why it's good to work with a partner that understand, so you know, we can help, you know, put the deal back together.
I think that is very critical, because especially in COVID times, for those of you agents out there that are with me, that are tracking with me here, let me tell you, it is not easy to show property. You have got to gear up. You've got to gear up your customers. You have to make appointments, even on a vacant property. A lot of agents are making 45 to an hour separate appointments. So there's a schedule that has to be maintained for the integrity of the property in itself. And now agents have the responsibility of sanitizing after they're showing. There's even, if you read the new permission to enter and advisory forms, where I think it's on page 2, where the buyer's agent has to, where possible, vacuum the property. I mean, I was totally floored. I don't know what these people at the Capitol are thinking, but I don't know. I don't know of anybody that wants to vacuum anybody's house after showing it. So very interesting time.
Christmas.
Yes, right. Please, thank you.
Portable vacuum.
I need a new one. All right, so let's move on to another topic, guys. One that people have a lot of concern about, and that is the topic of forbearance. So one of the questions is, you know, for FHA guidelines, for example, they provided some guidance to borrowers in forbearance during a federally declared disaster such as COVID-19. But, you know, kind of want to understand so that we can sort of coach maybe some of our customers who were going to buy something and now find themselves in a situation where, you know, their business has been affected, so they don't have regular income, and hopefully praying that, you know, everything becomes better in the fall. What can we do to help our customers with this type of information and this particular situation, serious situation? Who wants to go first?
I can take it on first.
Oh, thank you so much.
No problem. So generally, the rule of thumb for mortgage loans and forbearance, if a borrower's in forbearance, whether they miss a payment or not, generally, they would have to bring their loan current before the final approval in order for us to be able to close on their loan, generally. If they entered into some sort of modification program, they would have to make 3 payments on time, and they can't make a one-time payment. It has to be 3 months, 3 payments on time before they can actually apply for a mortgage loan. That's the general rule of thumb. However, every lender has their own overlays and requirements. So again, I always advise to talk to your mortgage advisor about your specific case scenario before making any decision about modification plan or forbearance plan.
Excellent advice. Thank you.
I wanted to add to that, Debbie. So for forbearance, a lot of people, when they first enter it, they didn't even know what that was. They hear in the news, oh, lender will forgive your payment, don't pay. And a lot of people are just like, okay, then I'm not going to pay, but they don't understand the consequences. And to be honest, all the lender, this is also news for us. So we change constantly guideline on how we treat forbearance. And first, let me talk about forbearance for mortgages. So for us, or for most lenders, I think you have to be out of forbearance in order for you to apply. Let's say if you want to refinance. I mean, just think about it. If you can't make your payment now, what makes you think a bank going to give you a new loan? It just, you know, basically it just have to make sense. So generally, I always ask the borrower, are you in forbearance? And we go even above and beyond making them sign something that they are not in forbearance currently, because, you know, there's sometimes it doesn't show up on the credit report. So basically, some lender will make them attest that they're not in forbearance.
Well, we're finding too that there may be people that are in forbearance, but it's not showing up on the credit report. You're absolutely right, Jasmine. You know, some people. Please go ahead, John. Please go right ahead.
And you guys, it's not just mortgage forbearance that the lenders are concerned with.
Exactly.
So we have separate policies on commercial loans. We have separate policies on student loans. We just came out to say that we'll do a mortgage with a forbearance and a student loan that just came out this morning. And these things are really fluid. But at least in my pipeline, the biggest challenge has been the commercial loans that don't show on the credit report. So we're not asking that question at loan application when we should be, and we get the refi in there and all the way in, and we find out they're in commercial forbearance and we're not able to do it. So the question isn't just about the mortgage. It's about any financing, primarily student and commercial, in addition to their mortgage. So we need to look a little bit broader when we're asking those questions.
So
John,
all,
excellent point.
Debbie, all federal student loan now is in forbearance, regardless if you like it or not. When you look at the credit report, it will show a 0 payment. When that happened, the main seller servicer, Fannie or Freddie, they will use either 0.5%. Let's say if you owe 100,000, they'll use a $500 payment. Fannie could use 1%. So that could really kick you out of qualifying. And most
Right.
lender will have overlay. Some will use 2%, some will use 1%. So like I said, it's important to really find out, you know, the lender you go to, how they treat forbearance for student loan. You're right, John.
No, that's amazing information, particularly for, you know, many professionals who do have, you know, businesses that they're trying to run that maybe are currently closed because of COVID and because of the restrictions put upon us by Governor Newsom with the shelter-in-place order. And then there's also people that, you know, have really large student loans in order to get the, you know, their master's degree or become a doctor or et cetera, et cetera. So very interesting times that we live in. I had one question is, are we seeing a jump in notice of defaults? And I would say, as someone who actually tracks this kind of thing, because it interests me, I would say we've seen some notice of defaults and some notice of trust sales. Many of the trust sales have been pushed out beyond August, and that's because the courts are closed. So we can't have a trust sale if the court's closed, right, at the county courthouse steps. So it's very interesting times for sure. Of the notice of trust sales and the notice of defaults, I have been seeing that there is equity in the property. So these are equity sellers. These are not short sales. These are people that have equity in the property and for whatever reason have not been able to pay their mortgage for more than 90 days. And I've been seeing too that when you look at the history of the payments, that they've been going out a little bit further, like 4 and 5 months. So it's very interesting to watch. But the few people that I've seen that have tremendous equity, they're just putting the house on the market and they'll sell it, and then they'll be able to cure that problem. Anybody else want to add to that? Because I'm also looking at some of their questions here. Let's see
I have
here.
one thing I want to say about rental property, Deb.
Go ahead,
So
please.
basically, a lot of my client, they may have current rental property. We can still use rental property income, but if you are an Airbnb and rental property, you have to be careful. Lender may not use that anymore. And also you have to go above and beyond proving that you are still receiving rent from your tenant, like via a current bank statement or something like that. So like I said, just more documentation, be patient. You know, we're not just asking it for fun. It's just a requirement. We're going above and beyond just to make sure that, you know, they qualify for the loan and not putting the borrower in jeopardy. Same with departure resident. You can still use rental income when they leave their home to purchase another one, but just, you know, extra stuff that you have to provide.
Okay,
Yeah,
very cool.
and Debbie,
Go ahead.
I just want to add to the topic of forbearance really quickly. There's
Please.
been a huge amount of cases where borrowers are in forbearance plan, but they're still making their payment. So we have a lot of borrowers who are asking like, well, I'm still making my payment. I haven't had any missed payment. So why can't you do my loan? And sometimes they don't even know that they are on a forbearance plan. A lot of the time when they call into the lender and inquire about forbearance, they are automatically on a forbearance plan. So therefore it shows up on their mortgage statement and the credit report that they're on forbearance, and now they can't get a loan. So it's really important to, you know, to have these conversations with your clients before you get into contract.
I agree. I think the days of, you know, somebody saying, hey, show me the house, I want to see it, and then running over there and opening the door is over. Because of the COVID-19 scare, what we are doing for some of the more expensive properties is we are requiring a pre-approval, a letter of pre-approval, not pre-qualification. And if they say, or if they're boastful that, yeah, I can pay all cash, Great, send us a copy of your bank statement and then we'll make the appointment. And that's because there's just so much preparation that has to go into keeping the people who are coming to look at the property safe, and then keeping the sanitized integrity of the property as a safe place to visit as well. I was talking with one of the agents, the guy with the borrower was saying, you know, well, I have $2 million in my bank statement. Why won't you book an appointment for me? And the agent said, well, the property's $4 million. I think you're $2 million short, you know, because he was saying I could pay cash, right? So I thought that was kind of funny. But certainly we live in interesting times, there is no doubt. And I think that because public open houses and public brokers tours are now forbidden by the shelter-in-place order that Governor Newsom has put on, you know, for us realtor practitioners, we are seeing appointments being made with real people that can really afford to buy that particular property.
Right.
Hey, Debbie,
sorry.
can I butt in real quick?
Yes, please.
Also, for the customer that can pay all cash, lenders can do a technical refi if they use all cash and give them their money back, or a deferred financing if they didn't use all cash, which will have a no cash out rate. But it's a good strategy if they do want financing to go in and do it all cash and then finance at your leisure rather than the stress of the contract. So we're seeing a big uptick in both of those types of loans. So we almost encourage it because we can do it the other way. All right, thank you, Debbie.
But on the flip side, cash out is really limited right now with all lender, especially you can't get cash out on investment property or even on your primary home. There's limitation on the amount of cash that you can get with most lenders. So check it.
Which is why our mortgage link is really, really important.
Yep.
Going back to that, it's a one-stop shop. Instead of calling 50 lenders to see who can do the cash out, you know, utilize our mortgage link. We'll be able to give you immediate answers on, you know, who can do what.
The cool thing about the mortgage link, it's almost like a live chat. It's awesome. I mean, I myself have gone on there because I've had questions, right? And just like, well, what about this? What about this? So, we have a question for appraiser. I would appraiser question now. Let's see here. Okay, this is a question for Michael. Michael, what can realtors do to make the appraisal process go smooth?
Good one.
So another great question. Excuse me. You know, it occurs to me that I probably have something that I can send you and post on your website just as a piece of information, which helps realtors identify things that they can do. But let me give you a couple of quick answers. If there are recent sales in the neighborhood that might not have been posted on the local listing service, they can add that information. Now, the appraiser is going to have to find some way to verify that information, but that's good information. And there are private sales that happen all the time. List of recent improvements to the property, permits for any additions, special agreements. In other words, maybe if you have a shared driveway with your neighbor, homeowner association documents are always welcome. And if you've got a house that has solar, whether or not it's leased or whether or not it's owned. And if it's owned, that's an advantage. If it's leased, it's a liability. So those are things that as a realtor, if you can provide those pieces of information, they help expedite and clarify the work order that the appraiser has to deal with. So.
Wonderful, Michael. Thank you. And I love too that you mentioned the features list. I think that is critical because oftentimes there's like a list of 100 things or improvements that have been done to the property that you can't all fit into the MLS profile itself. So having that list of features and benefits is in my humble opinion, critical. Go ahead, John.
Hey Debbie. I have also
wait, John wanted to say something.
Oh,
he
sorry.
was first.
Jasmine, mine is just real simplistic stuff. If you've done a lot of upgrades to your house, take the point of telling the appraiser and walking them around and showing it. And then also advise your customer to clean your house. You wouldn't believe some of the pictures that we see. And I have to say that it's hard for the appraiser not to ignore that, and it shouldn't, but the really simple stuff. But if you have a lot of upgrades, please ask your client to make sure that the appraiser is aware of all of them. They can't read your mind, and they might miss something, and it'll really help your value.
John, that is an amazing point. And for you agents out there, realtors, leave the staging in for the appraisal appointment. It makes a difference. It makes a difference. All right, big tip. Go ahead, Jazz.
My tip is on condo, if you are a listing agent and you're going to order all the condo docs, please order the condo cert with it. It's taking much longer I know it's a little bit extra cost for the seller, but it saves you so much time because we have to order it. And then a lot of time, like Mike said, the appraiser needs it. So if you have that as part of your condo disclosure, that would be really helpful.
Jazz, I just want to say that is $1 million tip. Because let me tell you, for the extra $100, $150, $250 that the seller is going to spend, it's going to save them an aggravation. And the reason being is that for these HOAs, I would say more than 50% are not professionally managed. They're managed by someone who's a volunteer who might be sheltering in place, working from home, and might be really busy. It might take 2 weeks to provide you with that cert. So don't be cheap, guys. Have the seller get the full package. Just my 2 cents.
Yeah, and I have a recent appraisal experience where the value came in short. The listing, the realtor was at the appraisal inspection. At the time of the appraisal inspection, she provided a recent comp that was just closed like a couple of days ago before the inspection date. However, the appraiser did not use that comp as a closed comp because there was no recorded doc on MLS or on the public record. So if that's the case, you know, what the realtor ended up doing, he ended up reaching out to his title officer and title plant and was able to dig out the grant deed and email it to the appraiser or the AMC in this case, you know, let them know that, hey, you know, here's a recorded doc, you know, it's closed. Can we use the comp? And definitely it'll help boost up the value.
Yeah, sometimes, you know, as agents, man, we've got to be investigators. We got to find stuff, you know, we got to GTS it and find stuff to help support value. So great point, Hove. I love that. What do you think about that, Michael?
So that's some great advice. I'll go one step further. In markets that are thinly traded, where there's a lack of inventory, every new sale has the potential to make a difference. And you know, while appraisers and lenders especially are sensitive to people trying to value shop, if there is a new transaction, maybe a pending sale that just hadn't closed or one that closed and imposed example hadn't been recorded yet, you can make an ROV request, as Jasmine had mentioned earlier, and include it as a new piece of business. And the appraiser can, in effect, do an update to the appraisal. And while no one comparable sale generally makes a value, it can often have an impact, and it's a valuable thing to do. Most lenders will allow us to have their an appraiser update an appraisal in that fashion. And it certainly saves having to go back to square one and start all over. There's no reason to have to do that.
Well, especially, you know, I think too that that's a very excellent tip. I think what ends up happening is for maybe some realtor practitioners that really don't have an understanding about how the lending process works and how the appraisal process works. Guys, come to our website, click on the link so that you can get the information that you need in such a great and supportive way where, you know, nobody is saying, hey, you should know this or you should know that. It's all about just answering your questions and answering your questions quickly and in a way that gives you the information that you need to help your customers move forward. Because in the end, that's really what we're here to do, is help buyers buy and sellers sell. So
yes,
it's really
Debbie,
amazing.
just to add on to that, I do want to point out, right now, a lot of the millennials, they're, you know, because the cost of living is so high here and they can work from home. a lot of them are thinking of relocating out of state. Some of them might want to sell. So just want to let you know, all the major sponsors at AREAA, we can do out of state loans. So while they're
excellent
while
point.
they're selling their home, we can help them with that out of state loan. So that's also, another tool if you have question about out of state, house financing or what's their down payment requirement. Is it any different from the Bay Area? Please go visit our link and we will find out for you. Like
Excellent.
Yeah. Even if
I
we
didn't
don't
know that.
well, we'll try
Thank
to get, see what other banks will do it. So we'll definitely provide some feedback.
Excellent. So let me check to see if we've got any other questions in the chat box. Let's take a look.
So Debbie, while you're checking on that, I just want to point out that we've been getting a lot of question and inquiry from realtors about stated income loan. So we are a mortgage banker, so we do a lot of non-QM loans as well. Non-QM mean non-traditional loans for non-traditional buyers, and right now there isn't a true stated income loan. It got suspended, but we do anticipate for it to come back. However, there are some similar loan to stated income loan that's dependent on a lot of factors like down payment, credit score, and so forth. So yes, I highly suggest to utilize that link because there's still a lot of resources, a lot of loan programs that are available for non-traditional buyers.
That is excellent. Thank you so much. And I think that's the thing that is so unique about the Bay Area is that not only do we have entrepreneurs and business owners and people that, the business owners have run the whole gamut, right? From restaurateurs to mortgage professionals and realtors to people that run daycares. I mean, it's pretty amazing the variety of people that live here in the Bay Area. So it's wonderful to have a variety of mortgage programs that could potentially be available to all of the people's needs. So I love it. I don't have any other newer questions. What I wanted to do is ask Lyman, by the way, I don't know if you can see, he's very handsome. That's our president of our chapter, Mr. Lyman Chow. And I was wondering, Lyman, would you be able to show us a screenshot of how the mortgage link looks like right on the AREAA.org/SF Peninsula website looks like? Would you be able to share your screen and show us that?
Yeah, just give me a moment.
Okay, so while Lyman's, sorry to put you on the spot, Lyman, but I just thought it'd be really cool for people to see what does our website look like. It's a very cool website. When you go to it, it's very easy to remember, AREAA.org/SF Peninsula. And from there, you could see what events are upcoming. You could see the picture of our amazing board, good looking people, very smart, very bright. We've got videos posted on there. There's actually a full report called The State of Asia. And if you haven't read it yet, I highly recommend that you as a practitioner download it. It is free. And then this is where you can see how to register for our events. And here you go. This is right at the very bottom part there. It says AREAA San Francisco Peninsula got a mortgage question. This is our link right here. And so this is where you just put in the email, you type in a code.
And join.
Yes. By the way, guys, if you join, now this is a membership recruiting question. Guys, I can't think of a better value for your business than becoming a member of the Asian Real Estate Association of America. As a proud member, one of the founding chapter members as well, I can't tell you how much I have learned over the years, what great friendships I've created, not only with all of these amazing bankers, but also with other realtor friends and broker friends. As a woman broker owner, I have met other women broker owners that have really encouraged me and inspired me. So it's a great organization to belong to, probably one of the best $99 that you'll spend in the year. So no reason not to join. There, that's my pitch.
And then as you can see, you just have to put, some quick, what questions you have, what area you have inquiries in, and then it's a quick, we'll try to get back to you as soon as possible, but definitely within 3 hours. So this is like a 24, I wouldn't say 24 hours a day, but we will be managing this, and even on a weekend, someone might be looking, we get an email.
Yeah, I know. I've seen you guys answer on the weekends. We're on Pacific time, guys, so probably between 11 and 6, you might not get an answer. But if you do, I'll be intrigued. I'd like to know who answers that question at 3 a.m. Okay. All right. So, guys, this particular webinar has, Lyman, it's going to be recorded, right? Lyman? I believe it is going to be recorded. We are going to post
it'll be reposted.
Okay, wonderful. So we are going to repost as a recorded webinar. So you'll be able to come back and take a look again and maybe check out if you weren't sure about the questions or the answers to the questions. I want to thank our panelists for being here with us. It's so great to see your smiling faces. I can't tell you how much I miss seeing all of you in person. And thank you again. And until we meet again, please stay safe.
Bye, everybody.
Thank you. Bye.
Bye, everyone.